Bitcoin had its worst week since the FTX collapse in November of 2022. So is the bull market over? Or maybe it hasn't even started yet. Today, regardless of short-term price, we look at Bitcoin as a long-term call option on continued global destabilization, de-dollarization, and the redistribution of wealth from young generations to older ones. So, stay calm, stack on. Welcome to Bitcoin Daily. I'm Dante Cook, head of Swan Business. Last week, Bitcoin experienced an 11% correction, marking its biggest drawdown in a single week since the FTX collapse in November of 22, in which it fell 22% in a single week. With 4 straight weeks of price declines, long-term hodlers are thinking back to 2017 vibes or early 2022 vibes, where Bitcoin had weekly declines of 5 straight weeks. But we continue to take the approach of Katie Stockton of Fairfield Strategies, who says that you should continue to hold Bitcoin as part of your portfolio and continue to buy regardless of price action because it's a long-term call option.
I mean, there are times when Bitcoin can actually be an indicator of what to expect in the NASDAQ or just the risk-on trade.
Yeah. Correlations have been pretty high, too, recently with the NASDAQ 100 and Bitcoin. And then you start to think about them all as these risk assets, right, more broadly. But, of course, the NASDAQ just keeps going and going and going, and Bitcoin has broken some support. So the 60,000 level is what we were watching. And it's not a major support level, but it resolves a trading range to the downside that suggests that we'll see more corrective price action. Next support for Bitcoin is roughly 51,500. So still some downside from here, but still within a long-term uptrend. We're big believers of just having a small percentage of a portfolio in Bitcoin, almost regardless of the price action. We still want the long-term trend on our side, but almost as a call option to take advantage of the upside long term.
This obviously isn't financial advice talking about the price, but there's a unique trend that's happening. Typically, like we've always said, Bitcoin is the great absorber of global M2 liquidity. And as Dr. Jeff Ross always points out, it tends to rise and fall with global M2 liquidity. But right now, as you see with the red line, Bitcoin's price is falling while global M2 and RSI is rising. So we believe that these will course correct and converge and go back to their normal pattern and trend, which is rising and falling together. Meaning, this could be a good opportunity to continue stacking. But I want to go back to the comment that Katie Stockton made in the video, which is buying Bitcoin as a long-term call option. She didn't really lay out what call option meant. So what does she mean by this? Let me give you a few ideas of some long-term potential reasons to buy Bitcoin as a call option. Call option number 1. Bitcoin is a continued long-term call option on global destabilization and de-dollarization. Today, Russia and Iran officially finalized the requirements for integrating their national payment systems. This marks a key point in the integration and operational capabilities of a BRICS system, which aims to have local currencies continue to hold their purchasing power instead of the dollar, which, if you look at black markets all across the world, the thing that people actually want isn't the local currency, it's the dollar. Call option number 2, the continued redistribution of wealth from the poor and the future generations like millennials to boomers and the people who hold assets. Boomers have disproportionately benefited from the current financial system and tend to get more benefits from the system as time goes on. As more money is printed, as more Social Security benefits are passed down, and pricing becomes out of reach, stocks become unaffordable. So for future generations like millennials, what assets are they supposed to put their wealth in for the long term? Thanks to our friends at Simply Bitcoin and our friend Nico, they pulled this clip from Scott Galloway. This clip nails this thesis exactly. Millennials and younger generations are priced out of owning stocks, which are unaffordable right now, real estate, which is untenable. We've talked about this a lot. And many are not starting businesses, specifically physical businesses, because the cost to start a business are really high, with inflation being as high as it is, as well as interest rates being high, making SBA loans and other things very scary for them to want to go out and take that leap. So that's why millennials and younger generations are opting for Bitcoin. Call option number 2. Listen to this clip here.
The average 70-year-old is 72% wealthier than they were 40 years ago. The average person under the age of 40 is 24% less wealthy. And if you think, I believe that almost every major economic policy in the US is nothing but a thinly veiled transfer of wealth from young to old, from the entrants to the incumbents. 2 biggest tax deductions, capital gains and mortgage interest. Who owns stocks and homes? People my age. Who makes their money from current income and rents? Young people. Social Security, which you're not supposed to talk about as this third rail, I see it as just a $1.4 trillion transfer of wealth from young people to the wealthiest generation in the history of the planet. I'm not suggesting Social Security is a bad idea, but let's call it senior security, because I think that type of transfer of wealth should be based on need, not on whether or not you have a catheter. So I think it's outrageous what is going on. And what do you know? We have, and then the ultimate intergenerational wealth transfer in the history of the planet was, I have an idea, under the auspices of a virus, a million people would be bad, dying would be bad, but what would be tragic is if boomers got less wealthy. So let's come in and flood the market with $5 to $7 trillion in stimulus. 60 to 80% of it, depending on which survey you look at, was not spent. It was saved. It wasn't spent on food or medication. It was saved. People didn't need it. So what happened to that money? It went into the market. And you saw real estate prices go from an average of $290,000 to $410,000 in the US. And then when you couple that with interest rates, the average mortgage has gone from $1,100 to $2,200, meaning that whereas 2/3 of Americans could afford a home, now it's 1/3. So if you owned a home, champagne and cocaine. Look at what's happened to the stock market. Look what's happened to the stock market. It's screamed, right? So it's great if you own stocks. So the entrants have essentially been screwed to keep the incumbents rich. And who's going to have to pay for this stimulus that benefits me? The entrants. It's debt. It's all been debt-fueled.
It's funny. Turns out that printing money, trillions of dollars in several months or a year, has lots of unintended consequences. Sort of like doing a bat flip after hitting a bomb, hitting the umpire and having him fall like it's a cartoon. Was this staged? Call option number 3. Bitcoin will become a global savings protocol and something that's used everywhere around the world as a means of protecting wealth against monetary debasement. And this call option becomes realized if the United States government stops attacking Bitcoin and crypto and starts leveraging it for the innovation that it is, sort of like the internet. The US government not attacking Bitcoin and it becoming something that they rally around is a possibility. The Republican Party just released an official document citing their desire to protect crypto and Bitcoin as an innovation in America moving forward. They want to give people the right to self-custody, to mine Bitcoin, to transact freely, and most importantly, to not over-regulate and even have things introduced like CBDCs, or central bank digital currencies. If the United States takes a pro-Bitcoin, pro-crypto stance, then that will go a long way to the rest of the world following suit, given that the United States is the world's largest financial superpower. This call option becomes really valuable, especially if a bank like JP Morgan with 86 million customers says that you will need to pay them for them to hold your money in their bank. These are just a few of the long-term call options that you should be thinking about, despite the short-term price action. Zoom out, invest, don't gamble. And on days like today, remember, just educate yourself. If you're getting value from these daily videos, please do subscribe to the channel. And if you think other people should get encouraging videos like these or get the real news about Bitcoin and what's actually going on, well, then send it to a friend as well. Thanks for tuning in. This is Dante Cook with Swan.com. Happy stacking.